Okay, cool. Now we're going to go into a little bit more surrounding Fibonacci. I'm going to highlight the best level to work from, also timeframes too, just as a little reminder. Here we have GBP AUD in front of us. It's the daily time frame. Recently, this pair has tapped 3 weeks in a row at monthly resistance 7500. We have a 3-pin formation as well, 1, 2, and 3. But what's interesting here is that, as you can see, this candle, this candle, this candle, the bodies of each individual candle could not sustain a closure above 7500. So we had a rejection and a rollover. Okay, this is rolling. Now, with that being said, last week we had a continuation candle. So we had the 3-pin, 1, 2, 3, boom, continuation. Remember, guys, we don't really look at 3 pins or candlesticks on the weekly. And when I say that, I mean entries. Of course, we're going to use them on the weekly and the monthly chart to spot continuations, reversals like this one, reversal here. So after, not last week, but the week before, this should have been analyzed and broken down into an easily digestible piece of analysis, which only would have really favored downside movement for the week ahead, which we did get, a small pullback and continuation. So going into Fibonacci, fibs, we only really want to be looking at daily time frame and 4-hour mainly. If we stick to the daily and the 4-hour time frames with the Fibonacci tool, we will gain utmost clarity on the market direction and specifics, and we'll also have fibs drawn on, or fibs active. When I say active, between C to D running, okay, the actual movement that we're looking for, which I'll highlight in a moment. So when I say this, I'm talking, we're not going too low, like into the hourly, where it's a little bit messy. It can be a little bit difficult to then go to draw on the Fibonacci from A to B. We're keeping it nice and clean. Weekly and the monthly, I wouldn't really go there with fib as well. You know, you can have an attempt at drawing fib on the weekly. I wouldn't suggest monthly. Weekly, we could have a go on the weekly first. If we can't find anything on the weekly, don't force it, and then we can surely come down into the daily and the 4-hour. What I like about the daily Fibonacci is that, for instance, here, I spotted that potential reversal on the time frame of the weekly, right? And here now I can see where a high was made and where a low has been formed as well. So we can actually use our candlesticks and key levels to draw on Fibonacci to an accurate standpoint and degree. So over here I have the highs of the 3-pin, 1, 2, 3. It's a 3-pin formation, 3 candles. There's another 3-pin formation here, 1, 2, 3. So we have the bearish, bullish. Then we have the pullback and so on. So what's important here is that we have 1, 2, 3, 4, 5 candles on support as well. So I've used the support region. I've hooked it onto the high of the 3-pin here, 1, 2, 3. So I'm using 3-pin high there to attach my key level. I should really have used the same over here as well. Same over here. And then I have the lows being retested there once more. So with the fib, we're only ever going to be using fib retracement going forward. Your Fibonacci should be the same as this. Now, you guys should have selected 38.2 and 0.5, so 50% fib and 38.2% fib. I've recently turned these off. I'll go into why in a moment. This is the purpose of this video, just to give you a little bit of refinement over the Fibonacci. You should also have on minus 27, this one here, and then the minus 61.8, so 2D target levels. This is all in the book and it's all on the videos as well in the members area. Recently I've turned this one off. So I have 78.6, 61.8 on, and minus 0.27 on. Background off, levels, prices, percents, all on as well. Labels to the right hand side. Labeled on the top. So that's really, really, really it. And that's how we can refine this tool in particular. So GA taken from highs, weekly highs, down to daily lows, and we can actually line up the fib with our key levels. We can line up the fib with our key levels. Now, as you can see, because I've already had the key levels on there and I know why they're placed on, two of them, this one and this one, because obviously before this happened, this level was already on there when GA made these multi-month highs over here. So I've utilized the key level of resistance down to the key level of support as an average, because it is an average of all of these wicks, 1, 2, 3, 4, 5, rather than me placing it at, rather than me placing the fib right at the bottom there. Okay, I can just line it up with the key level. I've actually seen how efficient and effective this is, lining it up with the key levels which you've already placed on. So as your key levels improve, as your candlesticks improve, everything else follows suit, if that makes sense. All right, so as you can see, I turned off my 38.2 and my 50, right? Here and here. Reason being is because recently the market, now this is a way you can really refine your Fibonacci, is by removing 38.2 and 50. Obviously, it's good to know which each level means, what it stands for, and so on. But again, to tidy things up with Fib, because I get a lot of questions from students saying, Sean, which one should I go for, 38.50 or 61.8? Now, the idea behind the choosing of the levels and which one to actually trade from comes from the confluences that we may see in alignment with the fib. So for instance, if we have a confluence of a monthly key level, daily or weekly key level right on or next to our 38 or 50, then we're building confluence. Alongside that, we're also obviously going to be taking into consideration our candlesticks, key levels, any ranges we can maybe draw on there as well. So in the case of that, if you take off the 50, take off the 38.2 and leave these on here, I'll explain why in a moment, and our D extension target. So over here we have fib A, yeah, at the top. So fib A came from the 3-pin formation and the key level of resistance which I drew onto that 3-pin formation. We also now have fib B. So Fibonacci B, our secondary point of call, came from, where did it come from? The average of these lows. The 3-pin formation over here, where the average respected the key level of support. So I've lined it up to support. As you can see, I've layered it onto the top, I've averaged it out, clean as hell. What we can see also, all right, the regional range that we want to be more or less trading from is a pin to the 61.8, which we can see here twice, pin, or a pin into the region. So what we're trying to do, we are now trading from the region of the 61.8 and the 78.6. So 1 second, just give me a moment. I'm just going to do this really rough. This is an average. So that region is a very, very specific and special region. Why? Because guys, many people out there who are trading from the 38.2 and the 50%, which is anywhere around here, many place their stop losses in the wrong area, wrong region. They don't give the trade enough breathing room. Well, to be fair, it's not that you don't give the trade enough breathing room. There's just no structure towards the stop placement, because many people are now placing stops just above the 61.8, whether it be 5 pips, 10 pips, 15 pips, whether they're trading on the 38.2 or the 50%. All right? The market knows this. The market will often come through and spike. It could spike to the 61.8. And if we do see a valid reversal there in alignment with, let's say, one of our key levels, we can go into the short. Or it could come right in between. So what we have to do is we have to think of the 61.8 or 62% and the 78.6 or 79%. This region here always helps to highlight that zone as well when you place it onto the charts. That region right there is our strike zone to go short. It helps as well because if we are looking for trades, it could even spike to 78.6. It could come in between, anywhere in between, reverse in between, or even just spike to 61.8. So what we're trying to do here is really refine our Fibonacci practice overall. And now we only have one target on there as well, which is -27. So Fib becomes a lot easier. Our entries are high risk reward entries. The pullbacks, we're getting on stronger and deeper pullbacks, which helps us risk reward wise to keep stops to a minimum and allows the trade to actually play out to target one. So again, there's no confusion on, is it going to be target one or target two? We can just break it down and we can always have it set at target one, -27, D1. So Fib A, Fib D, Fib A, Fib B, sorry, Fib D in between, Fib A, Fib B, Fib C in between, sorry, and then Fib D, done and dusted. Now with this, let's say for instance 1, 2, 3, you had the 3-pin formation, you entered after the body of the third candle, closure, 3 pins, 1, 2, 3. You can, what we have to do with this, we have to be smart, we have to mix up 2 rules. One is the rule of the stop loss of all of the candles which we've gone through, which is 15 to 30 pips above the high. So we can calculate from here, 73, 25 above, and so on. We can also take into consideration the Fib rule, the stop loss rule for Fib. Stops placed 15. To be honest, it's about 10 to 15 pips above or below the 78.6%. So there's a strict rule here. Whoops, I'm still in drawing mode, my bad. There's a strict rule here. And the rule is to keep stops 10 to 15 pips above the 78.6. It gives it breathing room. Okay. If the market comes up on a daily time frame, breaks above, and we see a break and close above the 78.6, and it has to be daily, then the Fib is invalid. Take it off. So we have Fib A, Fib B, Fib C, and you're taking targets at Fib D. Okay. Here we've now transformed the Fib into deeper pullbacks only, highest probability only, to one target only. Let's have a look at gold. Okay, so gold, there's many things going on gold at the moment. You know, it's a breakout, it's a nice trade long. We also have the Fib though as well. So that last chart, that was the daily, but this would have all fell in nicely on the 4-hour time frame as well. So sometimes the Fib that you draw on daily, it could be a 4-hour setup. So if you're drawing on the daily time frame and you have a setup there, please guys come down into the 4-hour to see if you can refine your entries. Okay, so over here, what we can actually see is A down to B. The retracement comes in here and even here as well. But on the 4-hour, you can see 3 pins, 1, 2, 3, 1, 2, 3, right there as well. So that would have been your entry if you would have seen that. So you can see wick, 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 wick. These wicks into the region, the reversal, rejection of the region, wherever it may be. Remember, just always highlight that zone. And then what we can see now is, boom, target done. Rolled over, 120, 150 pips. So that's the Fib there on that. So gold, daily Fib. I found this one not too long ago. Taking it from... We can take it from the support level because this is the last high or low. You can see the leg here. From low to high, pullback. That's the leg. Let's try and place it onto 1200 directly all the way up to the peak, the candle. Okay, at the top there. Boom. What can we see, guys? What can we see? Now, with this one, there is a small altercation that we can run over, right? So if I aligned it to 1200 there, as you can see, I would still class this as a rejection. This is a morning star 1, 2, and 3. Can you see we also have daily support there as well, just below the 78.6, but we did get a daily closure just below. If I put my Fib right onto the wick there, we can see the change, i.e. spike through. We haven't gone below and closed below, and then we've rejected it and come back to the upside on these 3 candles over here. So we have a couple confluences. We have the trend line 0.3 in this high low series 1, 2, and 3. We have the daily area of support, which comes from over here. See that there? And then we also have this region being fulfilled. So if I go ahead and put on rectangle, so if I put the rectangle on there, highlight in between 61.8 and 78.6, we've come into the region and we've reversed straight out of it. Reverse straight out of it. Such setups like this, which aren't too clear as to, okay, let me find a setup, let me find a buy entry, let me find a buy entry, even on the 4-hour time frame, we've come in and out. Such a setup like this, where it's not too clear, where we can find a solid place to actually buy or get into the market, we can use this to say, okay, cool, we've come into the region, the deeper pullback, fulfilled many confluences down here. Gold is now telling me, well, the Fibonacci on gold is here, the FibD target, there, 1322, so new high. So it's actually, even though that we've potentially missed a perfect setup down here, it doesn't not really matter, especially on the daily time frame, because 1322 from where we are now, 1266, you're looking at 600 pips to the upside on gold. 600 pip move. So even though we've missed the opportunity here, it doesn't matter, because we now know the bias of this. There's a 75% chance from this region, a rejection of this region, we will see target 1. As you can also see on the chart, our target 1 minus 27, our D extension, comes right next to 1325. Okay, 2 confluences for a target as well. So we can actually use that from C to D as a bias as to where this market's going to go, and it can also then help us define that bias going into the future. So another setup there on gold. Now here, Euro USD, just as a quick one, we could maybe pull back a little further before continuing our upside movement. The 2 levels as to where we could draw fib from right here, we could either go from this bottom wick, or we could try it straight from the support, so A to B. Line it up with a resistance there, support into resistance. What we could then say is Euro USD could perform a deep pullback into the region here, and right in between that zone, as you can see, we have our weekly support. So Euro could come into that region just as a technical perspective with this Fibonacci, because it is bullish. Weekly moving averages are up, daily is up, but we can pull back. So here would be extreme scenario. That would be how you would draw a fib there on the daily, and you guys can do that, or you can go back on the charts and see how this actually played out, because again, today is Sunday the 28th of May 2017. You can see how this one plays out. So with the fib, what we've now done on this video, we've taken off the 38.2, we've taken off the 50%. We are utilizing Fibonacci on daily time frames in the direction of the overall trend. We are using and waiting for the market to pull back to 61.8 to 78.6 or in between. So always draw on the range in between. If it comes into alignment with any other confluence of support, monthly, weekly, daily, all the best. And same with our target 1 as well. So target 1, 75% chance after a key reversal placed in or priced in between those 2 levels, we will see that 75%. And again, what we're doing, guys, is going from higher low, higher high, higher low forming, higher high. Deeper pullbacks, great risk reward, simplicity in a nutshell.